Hello, everyone, and welcome to another episode of Insider Financial Talks Penny Stocks. My name is Alex Carlson. I will be your host today. I am the editor-in-chief of InsiderFinancial.com, and today we are going to be discussing 4 penny stocks on the move. They are Healthier Choices Management, HCMC on the OTC markets, Greene Concepts, INKW on the OTC markets, Comstock Mining, LODE on the NYSE market, and Sundial Growers, SNDL on the NASDAQ. But before we get into that, we have a few housekeeping issues. We have no business relationship with any company whose stock is mentioned in this video. Insider Financial and myself are not investment advisors, and this video does not provide investment advice. Always do your own research, make your own investment decisions, or consult with your nearest financial advisor. This video is not a solicitation or recommendation to buy, sell, or hold securities. This video is meant for informational and educational purposes only and does not provide investment advice. For more information, please read our full disclaimer at insiderfinancial.com/disclaimer. And with that out of the way, remember to smash the thumbs up button if you like this video. Hit the red subscribe button and the little notification bell to be notified when we go live with our new videos. Also go over to signup.insiderfinancial.com. This is where our subscribers get first look at the penny stocks we are going to be covering. Stocks like NEO at $6, MMMEDF at 34 cents, ENZC at 0.001, and TSNP at 0008. If you live in the US, after you sign up with your email, you can also get on our SMS text service. It only works for US numbers. If you are outside the US, don't worry, you will still get our email alerts. With that out of the way, let's get started. With each of our videos, I try to do a little bit of an educational component for the newbies that are just getting into penny stocks. We try to stress repeatedly, trading penny stocks is not the same as trading blue chips. The key to trading penny stocks is finding the momentum before it happens and then being patient. Examples include, we got our subscribers in early on TSNP, ENZC, and by being patient, the subscribers are sitting on gains of over 7,000% in ENZC and over 36,000% in TSNP. And it's important to own a basket of penny stocks. For some, this can be as many as 10 to 20 or more penny stocks. We try to teach that, you want to approach penny stocks like you are a venture capitalist. And how does a venture capitalist invest? They invest across 10 or 20 different private companies. Some will go bankrupt. Some they'll break even, but there's a handful that are absolute home runs, and those home runs make up for the losers. So, for instance, if you have $10,000, the best approach would be to start off with $250 into each penny stock, and maybe increase it to $500 or even $1,000, depending on any dips. But you don't want to be too heavily into one with your initial investment. And, that's what we do here. We're position traders. We do not day trade. I don't like the intraday moves. I much more prefer the Warren Buffett style of investing. I enjoy researching hundreds of penny stocks each week to find the best ideas for my subscribers. If you are looking to day trade, Insider Financial is not the place for you, because we are not day traders. We are position traders. When it comes to day trading, and if that's what you are after, we recommend the folks over at True Trading Group. They go live 6 days a week with their live streams on YouTube. They also have a chat room. They do trade alerts. They have a lot of educational resources. Mike Edward and the team over there, the Wolf of Weed, they really know what they're doing. They don't do any OTC. They do mostly mid cap, big cap. They do a lot of options. So it's another resource, and we feel comfortable recommending them because we don't compete with them. They offer an ancillary service, and it's something that for some of you that are looking to supplement your income, you might want to take a look at what True Trading Group has to offer. And as we say, we specialize in OTC, but it's important to trade both OTC and at NASDAQ or NYSE penny stocks. The reason being is there's always a bull market somewhere. We really hate when an investor or trader pigeonholes themselves into a corner and says, "Oh, I only trade OTC, or I only trade NASDAQ or NYSE." You're going to leave a lot of money on the table. There's opportunities in both markets, and we really believe you should give yourself the flexibility to trade both. For instance, last year in the first half of 2020, it was much more profitable to trade NASDAQ pennies than OTC. And this is where we had our subscribers positioned. We captured runs in SRNE, NEO, INO, IBIO, WKHS, and many others. And then once the summer came, many of the COVID runners, they failed to find any momentum. And we had pivoted to OTC and caught runs in TSNP, ENZC, MMMEDF, and many others. And so far this year, what we're seeing, again, it's best to play both OTC and the NASDAQ NYSE. There's no shortage of multi-baggers in both markets at the moment. And right now there's no better time to be a penny stock trader, and it plays to be aggressive. The best analogy is, if you're at the casino and you keep hitting blackjack 21, you got a hot hand. That's when you want to press it. When the bear markets come and it's harder to make money, that's when you want to scale back, conserve cash, and play small. But as we move on in these four penny stocks that are moving, there's a lot to like and there's some to not like. Starting off with penny stock on the move number 1, HCMC. This is running as more traders and investors discover the company's patent infringement lawsuit against Philip Morris USA, and Philip Morris Products in connection with the product known as and marked as IQOS. And the lawsuit was filed in the U.S. District Court for the Northern District of Georgia. And HCMC's lawsuit includes claims that Philip Morris is infringing on HCMC's patent rights in connection with IQOS. And, Philip Morris claims that it's currently approaching 14 million users of an IQOS product and has reportedly invested over $3 billion in its smokeless tobacco products. Philip Morris has been very open about their ongoing transition from traditional cigarettes to their modified risk tobacco products, which include IQOS. And Philip Morris is also involved in litigation with R.J. Reynolds, so there is some patent issues there, but that HCMC says that has nothing to do with HCMC's claim. The lawsuit has serious merit. What we really like, we're familiar with Cozen and O'Connor. They're one of the top IP litigation firms in the world, which you can read their bio here. And what we like is that the chairman of the co-chair of the IP litigation department is Barry Golub. He has signed his name to the lawsuit, and he would not be attaching his name to such a high-profile lawsuit against a Fortune 500 company if he didn't think he could win. Lawyers like Barry, they go for the high-profile cases that want headlines and the big dollar verdicts. So, it's a big name law firm. We really like that. But, we're going to present both sides here. We see HCMC, it's a lotto pick, depending on the outcome of the case. It could be a home run, multi-billion-dollar judgment, or a dud. Investors need to keep in mind that there are 194 billion shares outstanding. That's billion with a B. For folks that have been trading pennies as long as I have, I know HCMC. It's the former VPOR, Vapor Corp. before the name and symbol change. They had to change the name and symbol. It was a share dilution scam. It destroyed a lot of shareholder value. VPOR at one time was trading on the NASDAQ. And they ran it into the ground. And I'm not trying to sugarcoat it and in anything, but that's just a fact. HCMC, they also have 11.1 million in debt on the books. They could convert that into stock. But these are things that you need to keep in mind. It is a pure lotto pick. But HCMC, they do have a real business, and they're generating $3 million plus in revenues every quarter. So there's pros and cons when it comes to HCMC. Right now, the trend favors the bulls, and again, approach this like I recommend with the lotto pick. Don't go too heavy. By all means, have an exposure, and let's see how it plays out. And our point here is I'm just trying to offer you the both sides of the coin. This way you can make the best decision for yourself and your family. Moving on, penny stock number 2 is INKW. INKW, it's running after its B water sold out after its first day of listing on Amazon.com. This really got the bulls excited. The company last month, they had issued a press release they announcing the availability of its B water product line. The page was live, and by the time the afternoon came, all product inventories were sold out. This includes all inventory sent to 3 different Amazon distribution centers around the country. Now, notice, guys, they provided no numbers. How much did they sell? Is it $1,000, 10,000, 100,000, 1 million? I mean, it's light on details. I know people get excited, or if I point out facts, they get all mad at me. But these are common sense questions that you need to ask for yourselves. So I'm just asking what anyone else should be asking. INKW, they have a current market cap of 47 million on 1.394 billion shares outstanding, and this is another company. They have 2.381 million in liabilities. So we really want to see the sales numbers from Amazon. It is positive that they sold out, but again, what is the quantity and what were the numbers? Once we get details on that, then we'll get excited about these developments. But until then, we'll move on. Penny stock number 3 is LODE, and LODE, it's a silver miner running as the Wall Street Bets crowd tries to moon the price of silver. And for those not familiar with LODE, it's Comstock Mining Inc. This is a Nevada-based precious and strategic metal-based exploration, economic resource development, mineral production, metal processing business. The company has extensive contiguous property in the historic Comstock and Silver City mining districts. What we like most about LODE is that the company has been actively working to boost shareholder value. Chairman and CEO said, our successful sale of Lucerne has eliminated substantially all of our debt and recorded an 18 million plus gain and expectations of full year profit for 2020, all while reducing our operating expenses and positioning our balance sheet for growth. We believe that our resource-based technology properties, plant and equipment, and existing gold and silver mineral properties are undervalued. Our strategic plan includes establishing and growing the value of existing mineral and royalty properties, commercializing and growing a global ESG-compliant, profitable mercury remediation business, while still monetizing over $25 million in assets over the next 15 months. He further added that the realignment enables partnerships and transactions that increase value-creating opportunities and accelerate our precious and strategic metal-based products and process growth. Our goal is to deliver over $500 million of value, or at least $12 per share, from our existing assets and the commercialization of these environmental-friendly metal processing and mining technologies, partnerships, and ventures. So, it's trading under $3. He's looking to boost shareholder value to 12. And, at current levels, it only has a current market cap of 92 million. Look, owning silver, it's a hedge against inflation. It also has industrial properties. You can't go wrong owning silver. And I think the best way to play silver is LODE. So good luck to all and those that caught this move. Congrats. Penny stock number 4 is SNDL. We said that in January there's a lot more room for SNDL to run. We talked about it back here on January 12th. It was just 64 cents at the time. It's making a nice move up here. And what's happening is the company just raised $100 million. It's probably going to close tomorrow, the next day. This gives the company the cash to acquire the cannabis plays. 15% of the float is short. The Wall Street bets crowd is moving on from GameStop and AMC, looking for other plays to squeeze the shorts. SNDL is a name that has a big following and is one that is primed to squeeze the shorts. SNDL has no debt. This also makes it a takeover target, and its market cap is just $1.36 billion. We saw the Tilray-Aphria merger. We are expecting consolidation in the cannabis space. SNDL is definitely going to be on the radar screen as either a buyer or as a company getting acquired. And a couple of moves going on recently. It's in its business, driven by rising consumer demands for solventless cannabis extracts. SNDL launched high-quality cannabis derivative products under the Top Leaf brand. Sundial plans on providing additional offerings in the first quarter. This includes Top Leaf's Oregon Golden Goat Bubble Hash and Grassland Sativa and Indica Hash. Sundial also has a partnership with Chocolat to launch a cannabis-infused confectionery brand. This expanded Sundial into the edibles segment, which is a big and growing segment of the cannabis space. The two companies have announced they expect to scale collaboration across Canada, and they began in the Alberta market. So SNDL has a lot going for it, and we think this one can keep climbing. Right now, these 4 penny stocks are hot. They're making big moves in the market. If you missed either one, our recommendation is to don't go chasing. Be patient. Throw bids in below the market if you really like these 4 names. Buying dips, selling rips, swing trades. Guys, if you got profits, don't be afraid to take some money off the table. You won't go broke taking the profit. Don't succumb to the peer pressure on Wall Street bets to not sell. That's a fool's game. We preach selling here. We want people to book profits, make money. You're only answerable to yourself and your family. Do what's best for you and your family. Don't succumb to social media pressure. If that was the case, you wouldn't find me doing videos. I get a lot of vitriol and negative comments when I issue a sell alert, or if I hit a stock saying it's gone too far too fast. I'm just calling it like it is, and I'm trying to be objective, give unbiased advice to people, and help them with their decisions. Again, I'm not a financial advisor, but I've been doing this 25 years. I've seen a lot. I've made a lot of money. I've also lost a lot of money. After 25 years, I'm still in the business. So I've made more than I've lost. So, that's in the end, what it all comes down to. So, remember, all it takes is 1 or 2 to become home runs, and you've crushed the market indices for the year. So, whoever said to avoid pennies, they have no clue what they're talking about. So, if you approach the markets, like I said in the beginning of my video, you will do well. You will last in this business because this is a business and you are running your own trading firm. So, at the end of the day, it's all about P&L. And if you never sell, the gains aren't real. So just keep that in mind, because we've seen many players with millions of dollars in profits, and it all vanished because they never sold. So just keep that in mind, and follow your gut and do what you think is best. So and lastly, I just want to say, keep learning, keep educating yourself. The more you learn, the more you will earn. So that's the best motto I can say, and I wish everyone luck. Remember to go over to signup.insiderfinancial.com. I have a few things on my radar, going to be issuing alert any day now, so make sure you are signed up at signup.insiderfinancial.com. Wish everyone a profitable day, and I'll be coming live to you tomorrow with a new video. Thank you again for watching, subscribing. I really appreciate it. It means a lot to me. Thank you, everyone. Have a wonderful day. Bye-bye.